We got to get you some chalk, man. We got to get some chalk on there and write down what episode this is, what we're talking about, maybe the dates on there. I mean, I know the dates underneath us right now, but I mean, what the hell? Let's get this thing fully going.
Dang nabbit, Jared. It's been weeks and you haven't sent me any chalk.
You can go to Home Depot, man.
Jared.
You're going to get so much chalk in the mail next week.
All right.
Send him a suitcase.
Good. I need the chalk. Folks, that was Jared, our producer. Pete and I welcome you to the Rebel's Edge. I'm sure if you've been watching television today, you've probably been pretty much bored to crap.
Oh, what are they talking about, John? What are they talking about?
They're probably talking about what kind of shoes is Jerome Powell wearing? Do they look comfortable?
Is it tie red or green or blue or what is it? We got to figure this out. We got to know what's going on. So pathetic.
And by the way, which stocks are up big that we bought yesterday or down big that we sold yesterday?
Yeah, that clown fest is unbelievable, but that's a different story.
That is a different story. And rather than just dwell on that, we'll instead welcome you and introduce you, if you're a new viewer, to the 1 minute macro, where that's all we give it is 1 minute because that's all it deserves. Pete, we've got a moderate CPI. We know that. If you want to consider 7.1% moderate, I don't think Jerome Powell does either. I think he thinks it's moving in the right direction, Pete, but I don't think he thinks that 7.1%, when you've got a 2% target, is where he wants to be. How about you?
Well, there's a bunch of clowns out there who actually think, this is fantastic. It's not fantastic, folks. It's like John said, it's 7.1. It's better than maybe projected, but what does that really mean? It's still awful. So you're going to expect what you think should happen will happen. Powell's been transparent this entire time, John. It's going to be 50 basis points. That's going to happen. And now we just got to figure out what the forecast is. That's it.
Yep. And he's probably going to say something along the lines, Pete, of we're going to continue to be aggressive, but the pace may not be as fast. In other words, maybe we're done with 75 basis points. Maybe 50 is the high one now. And then maybe eventually we go down towards 25. Yeah. All right. Let's talk about Charter Communications, Pete, because they're down hard today. They're down hard because they are spending money pretty much like Zuckerberg or a drunken Zuckerberg, because they're going to have to spend $11 billion next year to jack up their high-speed internet because people want high speed. If you don't offer it to them, Elon Musk will. So again, that doesn't matter where you live. Elon can drop it anywhere. So he doesn't have the same infrastructure issues that the rest of the world does, Pete.
Yeah, it's very interesting, John, because you look at Charter and you see this $5.5 billion over the next 3 years being added to it. I mean, that's a real number. Try to digest that for a second. And oh, by the way, your revenue growth, it is pretty putrid at 3% or so, 3.1%. How about $97 billion in debt for this company as well, John? I mean, there's a lot of reasons to say, well, they're doing the right thing. They're spending money in the right way. They're going to get things faster and everything else. I don't disagree with that. But I'll tell you what, how about the misjudgment that they've had in the past in terms of what they've needed to do, and now all of a sudden they just hit the market with all of this. It's like a club to the head. That's why the stock is down 46% year to date. It's been absolutely hammered for all the right reasons. And everybody loves to look at names like this as, well, but this is a safety play. No, it's not.
Yep. No, it's not. And as always, when you see volume already at mid-session trading 2 times normal session volume, we're approaching 3 million shares right now, Pete. Normal is 1,450,000. So that's kind of telling you people are hitting the exits with their arms. Let's look at this one, even though we've never spoken about it before, I don't think, Pete. Nope. Chimera Therapeutics. We've got several biotechs coming your way right now, folks. This one was up 8%, 10%, 16%. They've got a skin disease treatment for the likes of eczema and things like that. and they've partnered up with Sanofi, SNY, and they've basically figured out ways that they can treat eczema with a drug that suppresses those, problems with your skin. And it's worth a lot of money, Pete.
Yeah, you suppress the inflammation, John, and that is a big deal. Now, also, let's just not forget, despite the fact that the stock is up 16% today and having a really great day, this is a stock that started off the year at 55, and on this 16% jump, it's now 30. So there's a lot of issues at stake here right now that they've got to cross. If this ends up being something really big for them, then I think this is a company that at least can gather itself back up towards that 50 mark. Otherwise, John, there's the pathway through absolutely getting your drug on the market is always difficult, and we know that. And it is a long process, which we know. So they've got free cash flow issues. They're burning it at a pretty decent rate, but I still think that it's got some good possibilities in front of it right now.
Right. Again, back to that average daily volume, because when our computers are looking at unusual option activity, we're also looking at the stock, folks. And this one normally trades about 600,000 shares. Today, Pete, 5.8 million shares. So a lot of people endorsing exactly what you just said, that maybe this one can climb back up towards 50, but I guarantee they'll be putting on some puts just in case ahead of the next phase result for how they're doing there.
High short interest as well, John. Very high short interest. So you want to talk about an absolute short squeeze right now when you've got 13, 15% short? Those guys aren't feeling too good just yet.
Nope. And Chimera, Pete, I think it was in Mission Impossible 2 with Tom Cruise. They had something they called a chimera, spelled differently, chimera drug in that movie, in case you want to go back and watch. All right. What about Moderna? It was huge yesterday. Normal trade, Pete said, was 5 million shares. Yesterday, it traded 26 million shares. It traded 8 million in the first hour today, Pete. So it kept climbing from 3% gain to 4% gain to 6% gain to 8%. I mean, it's been a pretty good run over the past 2 days for MRNA.
Well, they've got an absolutely phenomenal, when you look at the balance sheet, John, it's pristine. When you look at free cash flow, outstanding. But here's the one issue that I've got with this company. They claim that they are not just for what we've been facing all this time. And unfortunately, when we talk about what's going on with some of the partnerships, everything else, but they are not just a COVID company. Well, unfortunately, the answer is yes, they are, at least so far, because they've got some drugs definitely in the pipeline, John, but many of them, most of them are not only not into the market as commercial drugs yet, but they're sitting there in this pipeline at phase 1 and phase 2. That's a long ways for becoming a commercial drug that's out on the street. So I think that you just have to be a little bit cautious. It's had an absolute phenomenal run to the upside yesterday and today, but just keep that in mind. Now, granted, they are doing something with Merck, and it could be something absolutely great. It sounds like it's going to be great, but right now, this is just a COVID company for the most part.
Yep. That's been the history of it, Pete. And we've seen people jump on the bandwagon for this one and ride it way too long. Because you look at the 52-week range that Pete just talked about, folks, it's 115 to 321. The fact that it's back to 212 makes you feel better, but it doesn't mean that they're in the clear now. All right. What about this one, Pete? RNA. Drop the M off of Moderna's, and this is just RNA and ribonucleic acid and that kind of stuff. Avidity Bioscience is the name of the company, and it was up 30%. Then it was up 50. Then it was up 60. No, not over a couple weeks. Today. And that's because they're the first one to successfully inject this treatment for, basically bodies that aren't, the muscles and so forth that aren't growing correctly. And they directly injected it into the muscles and stopped that negative process from occurring.
And John, this is another one of those where you look at it, a year ago it was $26. After a 54% pop today, it's up to 17. So let's keep everything. You got to keep perspective when you're looking at stocks. And you and I try to do this and try to educate people as much as we can. There's a lot going on here. This is, again, one of these companies where you're in stage 1, stage 2, and that's phenomenal. And you're doing great work, God's work. You're helping out people that have a lot of different issues going on. This one, neuromuscular. But John, you've got to also have drugs on the market at some point. And that's one of the issues. Are they getting close? They're getting closer. But you've got to start getting more and more out there on the commercial side of things, because we talk about cash burn all the time with a lot of stocks. In the biotech or in the pharmaceutical world, you can only burn up so much cash. You only got so much cash before suddenly you're burning up and suddenly it's going to negative. You've got to get drugs out there that help you make money. That's where you get across the line. And that's exactly where this company sits right now.
Yeah, I think it's one of those issues, Pete, where the amount of stock trading, and you talk about short interests and all that, but again, this is 600,000 shares traded 33 million. You know, that tells you that people were squeezed like crazy. Part of that squeeze was when the margin clerks come in and buy in your shorts, which they were doing today, because the stock was $6 higher at the peak today, Pete. Or no, I guess $4 higher. It traded 21 bucks a share. Right now it's 17, to your point, Pete.
Yep.
All right, let's take a look at Tesla, because it's a stock everybody loves to hate right now. You know, everybody's back to hating on Elon Musk because he likes free speech and he's trying to free the bird over at Twitter. Well, this one has cratered, and it is traded all the way down into the 150 range. So somebody steps in with the stock at 159 this morning, Pete, and buys next Friday, leading into Christmas, next Friday, the 23rd. They're buying the 23rd expiring 160 calls. They paid $7.25 for those. So that's $725 each, which means you could control 1,000 shares for $7,000. Now, I'm going to tell you, folks, you can go out and buy the stock for $159, buy 1,000 shares. It's $159,000. If it moves up by $7, congratulations, you made $7,000 on that trade. I'd rather be in these calls and sell an upside call against it 1-to-1. And as long as you do something like that, you're addressing time decay. You're putting a lot less money on the table. You're not making the stock have to have an extraordinary move for you to get paid. That's the way Pete and I trade.
Right. I'm going to go with EQT, John. We're moving towards the Marcellus in Pennsylvania and several other states, but we're also looking at a company, natural gas, liquefied natural gas, all of that kind of thing. 2 million acres is what these guys have ownership over, John. And it's amazing what this company's been able to do just this year alone. It started off the year at 21. Now it's trading closer to 38. As a matter of fact, a moment ago, I was just taking a quick look. It's trading just above 38 bucks a share. It's had a great run. They've got great growth going on in this company. But somebody out there thinks a lot more growth is soon to come. They're about buying with the stock right there at just underneath 38. They're out there buying 5,800 of the March 40 calls for $3.50. It's a lot of premium. You're buying time and you're buying something that's to the upside. But this is a very smart trader. And here's why I say that. They've actually spread some of that risk off. So they're buying the March 40s. They're selling the March 46 calls. They're also selling the March 30 puts. I'm not trying to confuse anybody, but what they've done is they've taken in this much money and they've put out this much money. The total trade then becomes 65 cents. So rather than just the 350. Now, there's a lot of things that go along with that. There's risk to the downside. You're capping the upside. But I love this trade, John, because of the fact that it's a very sophisticated trader, wants to be long, doesn't want to have all that premium. And if that run goes all the way up to, let's say, 45, they're going to do very, very well on this trade. I love seeing what we're seeing there. I like nat gas. I like energy a lot still. I've liked it since the day that Biden got into the presidency. I continue to like it to the upside.
Pete, by the way, when Mark Fisher was with us in Florida last week, he, of course, talked about, I'm going to be buying nat gas, heating oil, and crude on Monday. He told people the exact time he was going to pull that trade off, Pete. and he's done pretty darn well. Do you know, Pete, that in California, they're paying 50 per million British thermal unit BTU for nat gas? It's up 61%. And it ain't over yet, folks. You better hope it's warm out in California the same way we tell people you better hope it's warm in Europe, because, again, there ain't a lot of natural gas that there aren't natural gas pipelines like crazy out there, Pete. Most of the natural gas pipelines move east and north. So I'm just saying it's going to be expensive out there.
Well, I thought when you started on that, John, I thought you were going to imitate Mark because he talks like this, and he's always he's a pretty jittery guy.
So what's the most important thing? How much can I lose? That's the most important thing.
Oh, man, that guy kills me. He's awesome. All right, let's get to the sports, huh?
All right.
So, John, let's start off with Mike Leach. My gosh, I mean, prayers out to him, his family. Yep. Unfortunately, for those who don't know this storyline, Mike Leach died over the weekend. Really sad, only 61 years old. But this guy, what makes him so special, and, anybody dying is an awful thing, obviously. But what makes the guy so daggone special, John, is he was so different than every single other coach out there. And when I say that, here's what I mean. Here's a guy who played rugby at BYU, did not play football, didn't play football since high school. You look at his background, he gets his degree. So then he decides, hey, I'm going to go to Pepperdine. He goes to Pepperdine. He gets a law degree. Then eventually he gets another degree in sports science. So he's traveling around and just wondering what he's going to do. And then he starts getting into coaching, and boy, can anybody coach like this guy? I don't know. Here's just some numbers, John. When he started the air raid down at Texas Tech, in 10 years, he won 84 games, lost 43. Then he goes to Washington State. He wins 55 games, lost 47. Doesn't sound great. If you know the history of Washington State football, that's unbelievable, because they are not a winning program. And oh, by the way, he had an 11-2 season as well, John. Then goes to Mississippi State. First couple years, just okay. This year, he's 8-4. They're going to a bowl game. By the way, they announced they will still play in that bowl game. I actually think that's the right decision as well. I think they should. But, John, here's the best part about that guy. He is the best quoting machine in the history of college football coaches and NFL coaches, quite honestly. Let me just read you just a couple just classics from this guy. So, it's like doing surgery with a chainsaw instead of a scalpel. Pieces and parts are flying everywhere. It turned in our favor, but we've got to clean up things next time. I mean, he just thinks a little bit differently. He says, I'm kind of a thin crust pizza guy. I respect people who like the thick crust, but it's mostly bread. I mean, these are questions or statements that he puts out there, John. He's just throwing them out there as people are asking him real questions about the team. He'll just go off on his own tangent. Sometimes a pirate can beat a soldier. That's a kind of a classic when you think about it, because he's definitely a pirate. Well, you're going to be dead in 100 years anyway, so live dangerously. I mean, everything about how that guy treated football and understood that it's a game, we're going to have fun, but there's a lot more important things to life than just that. And the last thing I'd say, and I know you've got some stuff as well, John, but he's a guy at Mississippi State. You're supposed to hate your in-state rival at Ole Miss, right? Well, he and Lane Kiffin actually had a great relationship. They loved each other to death. Everybody always wondered, how do you do this? But that's just who the guy is, because he sees you for who you are, and nobody is an enemy until they become an enemy because of something they've done. Just a great guy, and boy, it's going to be sad that this guy's no longer in college football.
Yep. Pete, there's a sports reporter who got a lot of good stuff from him, Alyssa Charleston, and that's her handle as well on Twitter, ALYSSA Charleston, CHARLSTON. She has some of the classic Mike Leach rants, which had nothing to do with football. Never. Like, for instance, he'd go off on Bigfoot, Pete, or he'd go off on aliens, or he'd go off on zombies. I just retweeted one of his zombie rants, Pete, because he's like, well, Yeah, I'd shoot a zombie, but there might be some attractive ones too. You never know.
You never know. How would you know?
Yeah, until you see one. You know, what if you saw an attractive zombie? Would you shoot her right away? Or would you,
That was kind of his Bigfoot type, as well, John. And he also talked about, we got dinosaur bones. Where are the Bigfoot bones? If there's Bigfoot, I mean, he literally would say that on the sideline while a reporter's asking him, "What about your running game? What do you think? Do you think Bigfoot really exists?" I mean, stuff like that. I'll go to the second sports thing, John. So here's what I got for you. There's a lot of injuries going on in the NFL this year. And I know you know it, and I know it. And we just saw Kyler Murray go down. I mean, every single week we see a lot of the biggest names in football drop into the ground. And it's really, really sad. So in the first few weeks of this year, first half of the year, 317 folks have gone on IR. In total, 464 have gone on IR. It is I would tell you this, John. I think here's the answer to what the problem is with this right now in football. And the problem is this. These guys don't practice football. There is something, and you know it, I know it. There's something called football shape. It's a lot different than running and lifting weights. It's completely different than running around in shorts with just a helmet on. There is something to be said for full pads, practices. Doesn't mean you beat the hell out of each other, but it means that you're playing at the highest end and you're going to be smart and safe. You've got pads in your pants, got all that, and you understand football fundamentals and football shape. And I think the problem is the Players Association has completely screwed the pooch here, because here's what they've got, John. In training camp, one full pad per day practice. The rest of the season, one practice per week in full pads. I mean, so you get 32 practices in full pads during the year. Now, if you never played football, you don't know what I'm talking about, but I will say this. If you're just practicing like that, it might as well just be, flag football or whatever. And these poor players don't understand that feels good because they're not having to hit as much. And this is trickling into college. But I'm telling you, John, my opinion is the Players Association has ruined the players because these guys are getting hurt at an unbelievable pace because they are not in football shape. What do you think?
Well, yeah. I mean, Deebo Samuel, there is no doubt that, some of these wide receivers, as in particular, Pete, are in phenomenal shape. Virtually every one of them has a shredded six-pack. They're very toned. And, they carry a lot more weight than you think. You think are like 175, 190 pounds. A lot of these guys are 210, 220, 230, some of these folks. So like Pete said, if you're not in that football shape, you're in great shape. And that's different than being in football shape. Like Deebo, I'm not saying he got hurt. He had an MCL, Pete, and an ankle injury this past Sunday. If you watched it, it looked pretty horrific. It looked like he might never play again because, it was one of those terrible injuries, Pete. But they say he only sprained that MCL and in his knee, his left knee, and a sprained ankle at the same time. So I guess that's why he was in that pain. But my gosh, I mean, every guy on the team came over and was, basically saying goodbye.
Right.
To him. It's different. If you're not, even if you're running full speed, like Pete said, if you can't really get the full feeling of having the pads on and playing in those pads, you may be, and the evidence shows that you've really kind of set yourself up for some potentially career-ending injuries in some cases. Thank goodness in the case of Deebo, it was not career-ending, Pete.
Yep. And part of the problem too, John, is by removing one of those preseason games, and I know everybody hates preseason, but by removing that preseason game and adding another full-on game, 17 games, great for money. It's fantastic for the owners. That's great. It's great for TV. It's great for all that stuff. It ain't so great for the players. It is not that great at all for the players, John. And that's another one. And that's not the NFLPA. That's the NFL themselves making that decision. And that's all based on greed.
Yep. Well, folks, that's going to do it for the Rebels Edge today. 1 p.m. Eastern tomorrow, we'll be back. And I'll let you know that we're up 200 points in the Dow, 23 in the S&P, about what, Pete, an hour and a half away from the Fed decision, which is virtually guaranteed to be 50 basis points. But then what is he going to say? How aggressive? And is he going to say could, or is he going to say will? Because those are two different terms, folks. We could slow down the pace, or we will slow down the pace. He'll be very measured about which one of those two words Jerome Powell chooses to use. We hope you join us tomorrow. Have a great day, everybody.